What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the overall market, what happened with the SPY, the Nasdaq, the QQQs, and the indices. Break down some very important information about what's happening tomorrow and why it's going to be absolutely crazy, because we have the PPI report coming out and also initial jobless claims. I'm going to break down how this could affect the market and why on earth you have to be very careful, because things are getting wild in this market. Before I break anything down about this, though, before I talk about the big data coming out for tomorrow and how it may affect Nvda, Apple, Tesla, QQQ, and many other stocks, let me mention a couple of things real quick. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,000. And the best part is, any can be a free Tesla share. The offer ends in just 3 weeks. Check it out before they run out. With that out of the way, let's get on with the video. All right, so SPY had a very, very crazy day. It was just wild today. We gapped up super hard after CPI came out. All right, so SPY pushes up in the morning right before the market opens, and then we gap up like this. People get excited, they start buying the calls, and what does the market do? We get a rug pull. We come down pretty hard, get a small bounce, and we continue to crash. The market crashed today all the way down to 408.87. And then after that, we formed a bullish divergence, a very small one. Then the market started pushing and pushing, and they pumped us. So what they did is they trapped a lot of people into thinking the market was about to crash right here. Oh, SPY broke below 409. We're about to crash. 407's coming, and blah, blah, blah. People started buying short positions. They started loading up on puts down here, right? A lot of retail was doing that. And what did the market makers do? They said, let's squeeze the shorts, because so many people were buying those 0-day to expiration options. So the market ends up pumping crazy hard all the way back up to like 314. I'm sorry, 414. Sorry about that. 414. And then we cool off just a tiny bit and close barely in the green, like up only 0.4%. So nothing too crazy. But like I said, the price action was just wild. It was very, very wild. And the question now comes, is the market going to sell off more, or is the market going to pump more? And I really don't know exactly how this will play out. It's going to depend heavily on the data for tomorrow. We have PPI coming out, and then we also have initial jobless claims. But one thing I do know is, okay, I don't know exactly how the market will close, as it's very dependent on the data. But I do know that there is going to be another move to the downside that's going to be made like this for the market, based off some bearish divergences on the QQQ and the SQQQ. That does not mean we have to crash all day. That does not mean it's just going to, crash and crash and crash and not get a bounce. It could come down and then bounce later or do something like that. But I do know there's going to be a rug pull, a small sell-off. It could be smaller, even more severe, depending on the data. But I'm pretty confident that's going to happen tomorrow, just like how it happened today, something similar. And I don't know how we're going to close. I mean, I am leaning a little bit more bearish, but I'm always open to anything because it depends on the data. Now, let's first talk about CPI. Was CPI a great number? Honestly, it was good and bad. What's good is we did see it lower than expectations at 4.9%, but the expectation was 5%. So it was just barely lower. This wasn't a big beat. And the problem is we have some bad news, and that is the outlook for CPI is not looking the best. Expectations for CPI for the summer are starting to go up again. People are starting to expect inflation to start increasing as we get into a much warmer environment in the USA, as we start to see demand increase during the summertime. And because of these different factors, especially because of supply chains and maybe even gas prices starting to go up more, thanks to the lack of supply that could be increased thanks to OPEC plus, right? The lack of supply that could get worse and worse. If that's the case, inflation could still start to uptick. Expectations are still suggesting that, and I think it's very likely. That's part of why I told you the Fed was a little bit suspicious during the last FOMC meeting. They could be suspecting this, and we are going to find out during the next CPI. It's going to be happening, I believe, the day before the next FOMC meeting in June. Now, on top of that, we have another piece of news that's not too great, and that is core CPI. Core CPI was a tiny bit lower than March's, but it was still pretty high year over year at 5.5%. So basically no change, almost no change on core CPI, not a good sign. and we're going to have to see how things go moving forward. Now, I also want to note that when you look at the numbers specifically, the food prices were not too horrible. We did see some things like cereal go up, but going down to like where we saw energy did play a role in making the overall CPI a little bit lower. But the question is, what's going to happen when energy prices start to increase? They're starting to go up for the month of May, and this could get worse by the summertime, like I said before, because of OPEC plus. Now, it's very hard to predict exactly how this will move the markets and also how it's going to affect PPI, because that's also coming out tomorrow. Before I talk about that, I just want to remind you guys we have Roblox earnings for Wednesday and Wendy's, and then for after the market closes, we have Walt Disney and Unity. Disney's going to be a big one, so make sure you guys are ready for that. Disney could have an effect on the whole market, maybe not a massive one, but it can affect it to some degree. But here's what's even more important though. Tomorrow, before the market opens, 1 hour before the market opens, we have PPI data coming out. We have initial jobless claims data, and we have core PPI coming out. Then, a little bit after the market opens, about 45 minutes after, we have the Fed Waller speech. So, Waller from the Fed is going to be giving a speech. The market will move based off that. But these three are going to be the three most important things: initial jobless claims, PPI, and then core PPI. I see a problem here. First off, initial jobless claims, we want that number to be hot. So we want more people getting unemployed, unfortunately. That's what the market's going to want. Uh, Wall Street wants a recession, of course. I know it's unfortunate, but it is what it is. This has to happen. It's inevitable at this point. And there's still a lot of tightening that's going to happen to the credit conditions. Now, on top of that, if we get the hot initial jobless claims report, that's going to be good for the markets. But then PPI is going to be just as impactful, if not more. So for PPI, here's the problem I was mentioning. Year over year, we're expecting 2.4%. CPI was only down 0.1%. Are we really going to get a 2.4% PPI? I don't know. Maybe we will, maybe we won't. The problem is it could be lower than March's numbers. It could be like 2.6%, 2.5%, but that could still be a little bit higher than expectations. So I'd be very careful with PPI year over year. For core, expectations are not as bad at about 3.3% versus 3.4% from the previous month. That's the year over year. We'll see how that goes. PPI has been cooling off quite quickly compared to CPI. I'm not too concerned about core, but I'm a little bit worried about PPI because maybe expectations are a little bit too low. We'll see how it goes, but it's very important that we consider this. Look at the data. This is just PPI itself. It's been just dropping really hard since 2022, since mid 2022. If it continues on this trend, it could cool off more. I would love to see that. If it's hot, the market's going to get a rug pull possibly. We'll see. But here's the problem. Like I said before, expectations for this are very, very low. We're expecting this thing to just come down to almost 2%, right? I don't know if we're going to get there that quickly. And considering that, the summertime is coming, we tend to see PPI uptick a little bit, especially during these phases like right here back in like the summertime. You can see it right here near the summertime back in like during the month of February to June. The same thing happened. Back in like many other years, near the end of the year, we do tend to see it uptick a bit also during the summertime. So like I said before, let's just be very careful. Now let me talk about the markets. So there's a bullish and bearish case for the market. The more bearish case, which I believe will eventually play out, I just don't know if we're going to remain in this zone. And what I mean by that is there's a possible head and shoulders developing on SPY right now. Right here, you guys can see there's a left shoulder, a head, and a right shoulder. This tells us that the market could pump a little bit more to fill this gap around 415 to 416, maybe by Friday, and then we get a rug pull afterwards. That's what this is suggesting. I believe that it's right about the rug pull. I think we're going to get rug pulled over the next couple of weeks. I think the market is due for a pullback by the time we get to mid-May. Why? Because of the debt ceiling. It could also happen because of other pieces of data. Don't forget about PCE data that's coming out. And other things could play a big role, such as the Fed and the banking crisis. Please, 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 please be very careful. Okay? Now, I also want to note that there's a bullish case, and that is if you look at the 1 hour time frame, we have to watch this 414 to 415 area. because if we break 415 and hold it quite nicely, things could change from there because there's a possible inverse head and shoulders like formation right here. SPY held support around 408. So this is a possibility. It's not as convincing to me, but it is a real possibility. If this does play out, then we could see the market pump harder. But I don't know if it's going to happen tomorrow. I would lean more towards like Friday if it does end up happening. But for now, what do I see for tomorrow? Now, for tomorrow, I don't know how we're going to close tomorrow. That's the problem. I just don't know. That's dependent heavily on the data. But I do believe there's going to be a moment, okay? Here, exactly what I'm saying. There's going to be a moment when the market sells off tomorrow. Whether it's near the open, whether it's in the middle of the day, the market's going to sell off tomorrow for some time. And I don't know if it's going to get a big bounce or not. That once again depends on the data and extent of the manipulation. But there is going to be a moment we sell off pretty hard. And when I say sell off pretty hard, we're going to see SPY maybe retest 410 sometime tomorrow, if not a little bit lower. And I think the QQQ is going to come down too based off the bearish divergence that formed. The odds favor a temporary sell-off. I don't know if it's going to last the whole day or not, but I'm just saying there's going to be a moment in time where there is some selling pressure for tomorrow and a retest of these lower levels. For Tesla, it's holding the 200 EMA on the 1 hour time frame quite nicely. I am seeing some potential for it to try to bounce off of this and try to push up. For Tesla to turn bullish, needs to break above 174.5 around that zone. If it does that, it's going to fly to 178 to fill the gap. I think it could do that, but that's going to depend on the data. If Tesla turns bearish, we have to see this thing break below the 200 EMA. It's holding so far, so it's not getting the confirmation for a bearish trend yet. If it loses the 200 EMA, it's going to retest 163, then 160, but for now it's holding up. For tomorrow, I think it's likely going to chop around a lot. It's going to try to push above 170, then come right back down, maybe retest the 200 EMA many times, and just trade very, very flat. That's what I'm seeing. But then again, it's going to be dictated by the data, so don't forget about that. For Coinbase, this was actually better than expected. It actually pushed up more. Had a bullish divergence here. It's starting to form a bearish divergence, but it depends on if it gets rejected here or not. So we have a bearish divergence on Coinbase. I don't know if it's going to pump a little more then get the rejection, or if it just rejects from here. That will depend on lots of pieces of data and other things like that. I also want to add to something else that's important, and that is going to be the dollar index. This is still pretty flat, so it didn't get a clean breakout when we dropped. It's just trading back and forth and back and forth. That gives the market some potential to push up more. NEO is looking more bearish to me. I mean, it's going to try to bounce, obviously, off this 7.9 area, try to push up one more time in the morning, then likely sell off more and just trade very flat, but it could sell off even more. Now, it does have a possible bullish divergence that just formed in the after hours, but like I said before, I'm just seeing it trading very flat. Not too much is going on, and it may see some added downwards pressure because of the NASDAQ. The HYG is just pretty flat. It's a little bit in the green, which could help the markets, but it's at resistance right now. We'll see if it rejects or not. Microsoft did better than I expected. It actually broke above the 310 area, so that was unexpected for me, but overall it's looking pretty good. Now, I'm not seeing much of a divergence, and it's gaining more and more strength. Momentum is weakening a little bit, so it's going to need to cool off a little bit, just a tiny bit, just to cool off the RSI, and then it could push up more, or it could just cool off, depending on the data. But for now, it's looking pretty good. I mean, it has some nice strength. We'll see if it continues. The bad news I have for Microsoft, though, is if you look at the market, it might cool off a little bit because the QQQ has a bearish divergence that developed here, and it did reject off of it. If we don't break 326 tomorrow, we're likely going to see the QQQ sell off and retest the 50 EMA around 322, if not a little bit lower. And the odds are favoring it closing red tomorrow, seeing some red, but I'm not too fixated on that, of course. I'm just not a fortune teller. I don't know what PPI is going to bring. I'm always open to any possibility, but I am seeing signs, and the technicals are telling us that the QQQ might cool off tomorrow. The VIX, I mean, it's pretty flat. It did bounce off this 16.36 area, but it's pretty much flat right now, not really doing too much. It could go either way. It's very indecisive. On the daily candle, it's indecisive, and it could really just go any way from here. I mean, this is just going to react to data. I can't really predict exactly what's going to happen yet until I know the numbers. But for now, we just have to be patient with it. The SQQQ is looking bullish to me because we have a bullish divergence that has developed and it held 28 quite nicely. So support is holding on the SQQQ. That tells me that we might see this thing bounce tomorrow. And if it bounces, we might see a sell-off temporarily tomorrow. Does it have to sell off all day tomorrow? Does the market have to sell off all day? It doesn't really mean that, but it does tell us that there's going to be a moment the market sells off quite significantly. And that's the reason why I'm talking about it. I'm not saying we have to close red, even though the odds favor that, but I do believe it's very likely we might see something like that. Nvda is pretty flat at 288. It's not really doing too much. There's this possible slanted head and shoulders like development, but it's not breaking down. It has some nice strength added to it. For Nvda, I'm expecting this thing to likely sell off with the QQQ retest of 50 EMA, maybe come down to about 284, try to bounce off of that and close very flat, if not kind of red. Aapl is looking nice. It could retest 175, it's holding up quite nicely, but there's not a whole lot going on here. Aapl to me looks like it's gonna see a moment where it sells off and maybe bounce later, and 175 could come later on for it. But there might be that moment it sells off because of the bearish divergence on the QQQ and the overall market. It may have an effect on Aapl. You could even argue that Apple's in the process of forming kind of like a wedge right now. It's getting very tight right now. We'll see how it goes. Depends on the data, but for now, it looks to me like Aapl could sell off in the morning, then rebound later on. Google's relatively strong, up over another 4%. If Google wants to break this 113.5 area, we could see it get closer to 115. But it is overbought right now, right? And when we see it in these overbought positions, this tends to be not the best of signs. The RSI is actually forming what appears to be a potential bearish divergence. I'll just double check on this. It could be forming it. It's very overbought, so it needs to cool off just a little bit. I'm looking at Google potentially to trade sideways, if not retest 110 very soon, but that does not mean it has to tank too much. Other than that, the 10-year treasury yield is kind of in the red as the market pumps, so now it's acting more normal. But if it rebounds, what I'd be watching for is this gap right here. Could it bounce off gap support? And are we going to see it try to fill this gap first? So I'll be watching that for now. I'm sorry, guys, that I can't give you guys like really confident predictions like I typically do. I'm not too sure about what the data will give us, but I am confident there's going to be a moment the market gets a sell-off tomorrow. Based off what I'm seeing on the QQQ and based off the current price action, that's what I am seeing. Just a temporary thing though, so expect lots of madness, expect lots of volatility tomorrow, and get ready for PPI. It's going to be huge alongside the data. Thank you for listening. Market to the moon as the long term is very bright. I also have some merch for you guys if you're interested in buying anything. And don't forget about the Moomoo link. The offer is almost over. Thank you. Market to the moon as the long term is still incredibly bright. And peace out.